confirmed on the 45 minutes because we have a 1 and a 2 here. We have something like an internal 1 and a 2, 3, 4, and a 5. Why no 4 is here? Because it is higher than indentation 2, but the next lower indentation than 2 indentions, 2 and 4. 2 internal 2s and 4. So this is high degree 4, and again we are moving into 5 before we round up 3 and have a high degree correction. So, but 3 was, I mean, probably we have missed the move. It will bounce out of 4 maybe, and we are going to 109.67. I take back what we've been saying earlier, that on the 1 hour you must see negative momentum in order to finish 3. According to our segregation, the one that we're doing here, actually 4 is an English label, means you see a 1 and a 2, 3, 4, and a 5 before you get to see negative 5, this 5, before you get to see negative momentum on the 1 hour time frame. The whole cycle is 5 swings, 1, 2, 3, 4, and 5. Alright, so let's take it to trade management. This is what we're expecting, and I believe maybe it is finished, maybe not. We take it live and try to implement it. It shows again the 1 and the 2, it shows the 3 and the 4, according to that 4 here on the 45 minutes on the 1 hour. Shows like 5, maybe shows correction 4. Right, and now we should be buying into this into wave 5. Let's take it live. Of course, the same 5 minutes, so we now can all relate to the trading conditions that we apply to take a trade, or trade parameters, or that we want to see traction on the 45 minutes and we want to buy negative momentum on the 5, and then you see traction, complete traction on the 45 minutes, and therefore we are correct in assuming there is trend continuation, and we will want to buy negative momentum on the 5 minutes or 15 minutes, whichever we get. We want to mark like 4. Let's start with the daily. This is the current daily advance. We see strong traction on the daily. This is the daily chart. We see very strong traction here. And of course, strong traction on the 4 hours and on the 2 hours. Now, right now, we're going to be seeing, just focus on momentum first, the strong traction and continuous traction, at least for the time being, on the 45 minutes. So we take an entry into the 5 minutes. Let's take a look at how we're going to go into this. So first start with the daily. We know the market is attempting to do a top out in leg A, and that must be a 3, 4, and a 5. We know there's a 4 at this point because of the negative momentum on the daily. A 3 has stopped out here. And because of the continuous positive traction throughout, we are still doing 5. We just have a leg 1 and 2 here because of the very slight positive momentum here. Originally it was a 4C, but we have amended the labels, and it turns out that this is a 1 and a 2. We are doing now bracket 3. So we have a 1 and a 2 in brackets. All this momentum traction is a 3 in bracket. Expected to go as high as 23,000, 22,100, and 28 showing, of course, 23,000, even 23,500. 3 in bracket segregates into a dot 1 and a dot 2. All the labels now we believe are correct and have been rounded up in terms of proportions and momentum segregated. So we are standing hopefully on solid support. We have a dot 1, we have a dot 2, we have a 1 in bracket, a 2 in bracket. We still have not finished 3 in bracket. That's all. We may have finished 3 in bracket, it doesn't matter, it's not showing. We have a 3 and a 4, we're getting a 5. We'll have a dot 3, we'll have a dot 4, we'll have a dot 5 before we finish that 3 in bracket. Top out in with 5 green English brackets. Then we get like A, B, and the C. It's a different scenario where you have to have a bearish market, and I don't think we're going to get a bearish market. But anyway, the projections are 23,000, 23,500. Let's take it now to internals. We start our segregation with 1 and 2 here. Remember, that is a wave 1 and 2. And then we're going to 3 in brackets. So that is a wave 1, 2 doesn't, we can't see it, but will take us to 3 eventually. All right, so as of that point, we have a 1 and 2 in yellow, 3 and 4, 5.1, 2A, 2B, 2C. We know this must be 2C because of the negative momentum. That's just 2A and 2C. And then we have another dot 1, dot 2, 3, 4, 5, 1 in bracket, 2 in bracket, 1 and a 2, 3. We're leaving here with a 4. This is the correction you're seeing right now. Should bounce out of level 3. If you see good positive momentum continuation in the 2 hours, and we want to buy it around that level 3, take us into 5. All right, at that point, we will have finished actually 3 in bracket. This 3 in bracket is not showing. Then we get to do a 4 in bracket, bounce out of level 1, get to do a 5 in bracket, yellow. That's what I'm looking at. And then we round up dot 3. We didn't put in the rest of the labels because they will complicate matters. But you just want to look back and to relate to the cycle in which you are currently advancing. So there's a 1 and a 2 in bracket, 3 in bracket, ends up with that 5. Before we do a 4. And then we do another 5. We don't have to bother about this. What we need to bother about is the retraction, where to buy into it, a level 3. We're seeing if projections from 2 Roman italic to 3 Roman italic, you want to buy 50%, 21,400, and 7, you want to buy level 3, 21,584. This market topped around 22,080. All right, we had longs, we should close them to start with. Okay, now everybody, I believe, knows what to do. We are not going to show the market except maybe tomorrow before Federal Reserve meeting if we're seeing negative degree 3 momentum. And I don't think at this point we're seeing negative degree 3 momentum. But we can consider to stand out of the market because we're going to get a big retraction probably, a lot of volatility. Everybody knows that we are going to be seeing negative momentum on the 3 minutes, negative momentum on the 5 minutes. We're going to buy a momentum reversal during Mr. Powell's press conference, likely, and preferably around 38.2, around the level, high degree level 1 or internal level 1. Let's take it now to the 45 minutes. So we complete the segregation. We're going to start with this zone here, 1 and 2 in Roman italic, shows here, 1 and 2 in Roman italic. All the internals now round up. We had a 3 and we're waiting for a 4 at that point. I believe all the internals are correct. We have a dot 1 and a dot 2. One other one and a 2, dot 1, dot 2, 5 greens, dot 3, dot 4, 5 greens, dot 5, higher degree 3 relating to that higher degree 2, a 4, dot 1, dot 2, we're still looking for dot 3, dot 4, and then dot 5. You want to segregate this rise, buy into it, and the bounce is probably at around the level 3. Take it to 5 minutes, so we take our segregation to start out of this dot 1 or 1 in Roman italic to A to B to C. Let's take a look. 1 to A, right, then we have an A and a B. 5 swings into C. We're going to get a D, we're going to get an E to round up a 3. The counter attraction at least going into the Federal Reserve meeting, but you want to be out of the trade before the Federal Reserve meeting. Should bounce 21,000, we think. 21,830 is support 1, 21,765 is internal level 1 to take us to internal level 3. If you wish, we could do the long before the Federal Reserve meeting if we get to see these two levels by simply buying reversal out of negative momentum on the 5 minutes, was already showing, and on the 3 minutes. We take the long between 21,800, 21,750, take it to the same market top, 22,110, 22,100, stand out before the Federal Reserve meeting. Again, we stand out before. So if you don't make target before the meeting, we also stand out. All right, let's check momentum picture, then do the trade, hopefully. We're looking at positive momentum on the 1 hour, positive on the 45. We knew we were going to get it positive on the 45. On the 30, negative on the 15. And on the 5. A lot of noise, of course. So according to our segregation, leg 5 ends here and C ends here. Just like a 1 and a 2, 3, 4, and a 5, truncated. This usually the market does this to throw us off of the trade. We have an A, we have a B, we're doing a C. That's all. You want to buy reversal into positive momentum on the 5 and 15 minutes. But we could actually do the short trade today. Why would we want to do the short trade today? On the pretext that going into the Federal Reserve meeting, at least the first half of the meeting and the first half of the day is going to be bearish for stocks. You're going to be seeing the strong dollar. That's what's perceived. And therefore, we will have low, at least everyone is afraid and moving out of the market. And so, if everyone is afraid of moving out of the market, why not sell it? We're on the market top. And at least we are able to see a motive wave here and not a growth wave. So I know we're seeing an A, we're seeing a B. We also can tell that we have an internal 1, 2, 3, 4, and 5 into A. We have a B. This is leg 1 into C. We get another leg 2 into C and then crash 3 maybe. So this leg 1 is doing an internal 1 into 2. A 3, 4, and a 5. I think we see a 1 and a 2 up there, 3, 4, and 5. We should sell moving average. We should sell, if you think, because I think the fundamentals are for at least reversal back to level 1, maybe lower. So today, going into the Federal Reserve meeting, we'll attempt to sell same head level, but look for rejection below level 1. And I believe this level 1 is this point. So we will attempt to sell 22,000. Market high was 22,150. Attempt to sell 22,000. Attempt to sell 22,000. And so this is actually 22,100. I said we're going to sell 22,000. Is even below level 1. Market is actually 22,000. We're going to be selling 22,060. I believe possible even to get 22,075 here, but let's just take it to 22,050. The stop of the hedge is 22,150, just 100 points higher. If we do the sell right, well, the target is top of that level E or the neckline. Tops of level 1s are 21,800. So for 22,060 to 21,800 is just around 260 points, which is fair enough, which is good. If it turns out that at least the start of Mr. Powell's press conference is bearish, which I doubt, so it's going to be by pressure, so we don't really want to go into this. But we can do the short. There's going to be a market retraction, like I was saying earlier. And the best entries are retraction to that wave 2. You can see here the whole labels much more clearer. A, B, and C. This is just leg 1 into C. Any leg 2 into C, you want to sell below that level 4, for instance. 22,070 is possible, 22,060, or we're showing 22,067, even 22,050. It's good. 22,050 is very good, actually. You see double heads, and I can draw a neckline here, and I'm at the shoulder level. So just a retraction back to moving average is a sell, take it to level E, 21,800. Stand out, if possible, before Federal release meeting tomorrow. Stand out, not if possible, definitely stand out before Federal Reserve meeting. It is perceived to be a bearish day for stocks, but holding the trade into the Federal Reserve meeting is risk. So here shows that you're moving the upper boundary of the ascending triangle on the ending diagonal, to the lower boundary of the ending diagonal, takes us again to 21,800. All right, so I believe this brings us to an end of issues and questions. All right, I hope we'll be doing good equity with the cryptos, with the cryptocurrencies today. Tomorrow we'll be looking in depth at all the currency pairs, because of course tomorrow the Federal Reserve is going to be announcing the interest rate projections. There's going to be, of course, a press conference, and there's going to be lots of volatility impacting all the dollar pairs and possibly also the yen pairs. All right, I hope again we'll be taking advantage of the crypto trends today. I hope all your trades are doing well. It's really been great having everyone with us in today's session. I hope it has been beneficial to all. We look forward to be all together again tomorrow. With this, I'll leave you all tonight. Wish you all the best fortune with your trades. Take good care of yourselves, and good night.